QSBS stands for Qualified Small Business Stock. Sometimes you'll just see references to Section 1202, which is the part of the tax code that speaks to the QSBS exclusion. In simplest terms, QSBS is an incentive that rewards founders and investors with a tax break for staying invested in startups. If you hold on to stock in an eligible company for more than 5 years, gains from the sale of that stock will be free from federal tax up to the greater of $10 million, or 10 times your stock's basis. If you're a founder, this can mean a massive reduction in your tax bill if you meet the right qualifications. In most exits we see, the tax rate is 23.8%, or $2.38 million in federal taxes for every $10 million you take home from a stock sale. With QSBS, that tax bill could go to zero, making it the single most powerful individual taxpayer incentive in the US tax code. Some founders also see relief from income tax at the state level. The rules do vary by state, but in several cases, a more than 35% combined state and federal tax bill can be eliminated through QSBS. The rules around what qualifies as QSBS are famously complex. There are both company-level rules and shareholder-level rules. In general, stock has to be granted directly by a US C corporation with less than $50 million in adjusted gross assets and operate in one of the eligible business categories. Really, more than 90% of founders in venture-backed startups qualify, but consulting firms, financial advisories, medical practices, law firms, real estate companies, and investment firms are a few of the business types that usually aren't QSBS eligible. Make sure to check out our other content on eligible business activities, which goes a bit deeper on that. Beyond the company level requirements, you must hold your stock for 5 years to qualify for the capital gain tax exclusion. Surprisingly, most startups that actually exit relatively early in the life of the company. We have data that suggests the average startup exit is just over 4.5 years from initial funding. So if you find yourself not meeting these QSBS requirements based on timing, entity structure, or business criteria, get in touch with our team. We'd be happy to run through every solution to help you maximize your tax savings. You can find us at QSBSrollover.com.